started in 2005. It's been 10 years now. And in these last 10 years, we put in 50% of all our capital to work in education. Some of the names you see here, some of them you'll know about, but I'll quickly give it to you. So we started in 2005 by investing in a company called EduComp Solutions. That returned 28 times our capital and went public soon thereafter. We invested in the Millennium School chain, again, as part of EduComp, and scaled that up very rapidly. I think still testifies to the question of can you scale for-profit education, K-12 schools in India. We then invested in a company called CL Educate, or Career Launcher, which was a supplemental education company based in Delhi, which is now pan-India and has diversified beyond MBA test prep into other businesses as well. Indus World Schools, and we're also controlling shareholders in EuroKids, which is India's second largest preschool chain. So if you look at the experience of the last 10 years, we put in about $75 million of capital to work. And the range of returns has been about 3x at the lower end and 28x at the higher end. And a large part of that has been realized returns. So if you ask us, what has been your experience been over the last 10 years by investing in education, I'd say, we've returned capital. Our LPs are happy. We just raised our third fund, and we've decided to allocate 40% of our third fund, or $100 million, to invest in the next 3 years in education. A few things have changed, a few things haven't, right? But let me highlight two massive trends over the next 20 years that I think are going to transform Indian education. The first is you'll see increasing parental activism. You will see this in schools, you will see this in universities. You will see parents, government, society, various stakeholders trying to pry open this black box, this opaque black box of education, and to look for the equivalent of the ingredient label at the back of that Maggie pack, right? You're going to see a lot of that happening, and as a result of that, I think businesses will have to respond to that increasing activism. Whether it is issues of fee control. I'm glad you started the panel by saying, let's not bash the government, because a lot of the activism that you see in, related to fee control and so on, that private educators like us don't like, are a symptom of this trend. And we'll have to take it head on, and we'll have to respond to it. So that's one trend. The second is the consumers of education, which are the students. We've been telling our portfolio companies this, the CEOs, the business heads, watch your customer experiences very carefully. Students are, landing in Terminal 3 of Delhi Airport. They're taking the Delhi Metro. They're using Uber and Ola. They're getting their stuff within 24 hours from Amazon. This is the customer experience. This is what they're immersed in today. And if your educational institution, your delivery, your quality, your responsiveness is out of step with that, you're going to run out of business. It's not just about education. You're just going to be snuffed out. So these are the two big trends that I see.
And from what is it that you look for in an entrepreneur?
So that is more traditional, because I think it's worked well for us in the past.
They have to work 24 hours for you.
Sorry?
They have to work 24 hours for you as an investor.
We look, actually, our entrepreneurs are so self-driven, they outwork us any day. But we're looking for experience, believe it or not. A lot of young entrepreneurs energize us with their ideas.
Right.
But frankly, we find entrepreneurs that have crossed their mid-30s, early 40s, seen multiple cycles. We find them more prudent, astute businessmen, which is what we think is needed to scale a business in education.